Hello and welcome to the first of the IAASB's three-part video series on our proposed revisions to our Going Concern Standard, ISA 570. I'm Josephine and I'm a board member and vice chair of the IAASB, and joining me to discuss our proposals are Ado, board member and incoming chair of the Going Concern Task Force, and our fellow board members and task force members Isabel and Wendy. As I mentioned, this video is the first of a three-part video series which will give you an overview of the key changes to the standard, and the next two videos in the series will cover two particularly important proposals in the standard in more detail. One of the videos is focused on the changes we're proposing to address calls for greater transparency about going concern in the auditor's report, and the other is focused on proposals related to the timeline over which the going concern assessment is made. But for now, I'm going to hand over to Isabel, who's going to explain some of the key factors that led to the initiation of our going concern project.
Thank you, Josephine, for the introduction. Let me now explain you why the IAASB is proposing changes to its going concern standard. You may wonder why the IAASB decided to make changes to its going concern standard, because you may recall that the IAASB has revised for the last time ISA 570 in 2015 as part of the project on auditors reporting, which was not so long ago. Since then, however, there have been several calls to further revise and strengthen ISA 570. And there are several drivers to this project. One of the drivers, as you know, is the existence of many corporate failures across the globe. This has put some emphasis on the auditor's work effort on going concern, and there has been many calls for more transparency in the auditor's report on going concern. The recent years have also seen increased risk of going concern and failures, with conditions and disruptions from the global pandemic and also some war situation, which have focused the attention on the challenges and issues pertaining to the auditor's responsibilities and work related to going concern. And finally, the ongoing uncertainties in the broader economic environment have put additional emphasis on the topic of going concern. So for all these reasons, and having considered, on one hand, the feedback obtained from the discussion paper received in early 2021, and on the other hand, the input from many roundtable and outreach events, the IAASB decided that it was in the public interest to revise ISA 570 and has approved the project proposal in March 2022. I'm now handing over to Wendy, who will present what are these key public interest issues that the project has addressed.
Many thanks, Isabel. I will now briefly talk about the key public interest issues being addressed by the changes proposed to the Going Concern Auditing Standard. One of the key project objectives to support the public interest is to promote consistent practice and behavior, as well as facilitate effective responses to identified risks of material misstatement related to going concern. The existing going concern auditing standard does not align with the current risk identification and assessment framework used by auditors during the planning phase of the audit. The extensive information gathering and research activities conducted by the IAASB determined a stronger link to the risk identification and assessment process during the audit would result in more timely identification of matters related to management's assessment of going concern about events and conditions that may cast significant doubt on the entity's ability to continue as a going concern. Inconsistencies in auditors' performance also generated this key issue and included, but are not limited to, variation in financial reporting frameworks, as well as the application of those frameworks, resulting in different 12-month periods being used for assessment of going concern, ranging from 12 months from the balance sheet date to 12 months from the date of approval of the financial statements or something else. Lack of clarity on auditor use of third-party information, technology, and information from sources external to the entity, differences in management's method to determine and document their assessment of going concern, leading to differences in how the auditor evaluates, and varying use and understanding of terms such as substantial doubt and material uncertainty. The next key public interest issue determined is the need to strengthen the auditor's evaluation of management's assessment of going concern, including reinforcing the importance throughout the audit of the appropriate exercise of professional skepticism. The auditor's exercise of professional skepticism needs improvement when auditing management's going concern assertion, especially when gathering audit evidence, questioning judgments made, and assumptions used by management and developing conclusions. As such, this key public interest issue prompted changes in the going concern auditing requirements to address possible management bias as well as auditor bias when collecting evidence that is supportive or disregarding evidence that is contradictory. The last key public interest issue I will address is the need to enhance transparency with respect to the auditor's responsibilities and work related to going concern where appropriate, including strengthening communications and reporting requirements. Transparency became a key issue to address in the public interest in three main areas: communication with those charged with governance, the communication and responsibility of the auditor with external parties, and the contents and context within the auditor's report for the auditor's work and related conclusions with respect to going concern. The communication with those charged with governance on going concern is not considered to be sufficiently robust, including that such communication may not always occur on a timely basis throughout the audit. Communication with external parties as issues related to going concern are identified during the audit needs clarity in terms of the auditor's responsibilities for additional communication with external parties, including with relevant regulatory authorities as applicable. Lastly, transparency and communication for certain matters within the auditor's report may not be sufficiently transparent with respect to the auditor's responsibility and work related to going concern. There is confusion which creates diversity in practice about the material uncertainty related to going concern section in the auditor's report and its relationship with key audit matters and the emphasis of matter paragraphs where there are going concern issues, including with respect to closed calls. I now hand the floor back to Josephine to present an overview of the key changes as a result of these public interest issues identified.
Thank you, Wendy. So ADI and I are now going to talk through some of the key changes being proposed in the exposure draft, and I'm going to start with terminology. And in respect to terminology, respondents to our 2020 discussion paper on fraud and going concern put forward their support for the IAASB to provide greater clarity in respect of key concepts and terminology shown on this slide to avoid the variance in interpretations and application. In this respect, we have proposed a new definition for material uncertainty related to going concern, and we've drawn on existing essential material that was included in the extant standard. And we've also developed application material to clarify a phrase that is used throughout the standard, may cast significant doubt. And this was because this is an important threshold which management applies when making judgments and decisions about the impact of events and conditions on their going concern assessment. And therefore, it's a very important aspect of the auditor's evaluation. Now, one of the focus areas for the project was the importance of enhancing the risk assessment procedures in the standard, and also providing a clearer link to the still quite recently revised ISA 315. So to this end, we have incorporated the key concept of ISA 315 related to performing risk assessment procedures to improve the relationship and integration between the two standards. And we have also added incremental requirements and application material that are relevant to going concern matters that supplement the broader requirements of ISA 315, an approach you may hear us refer to as the going concern lens. Now, in terms of the timeline over which the going concern assessment is made, as I mentioned at the start, we do have a separate video on the timeline which will have more information about our proposals in this regard. However, to give you an overview on this topic, the IAASB actually explored a proposal to extend the minimum 12-month period of management's assessment of going concern, but as respondents to the discussion paper expressed mixed views on this proposal, along with other reasons, the IAASB agreed not to pursue that proposal. However, respondents were supportive of exploring a change in the commencement date of that 12-month period of management's assessment, which of course is used as the basis for the auditor's evaluation. And so the proposals include a change in the commencement date, which is now going to be the date of the approval of the financial statements. Now, evaluating management's assessment of going concern is a key part of the auditor's responsibilities, and another area where our stakeholders emphasise the need to strengthen the standard by providing for more rigorous procedures to appropriately challenge management's assumptions and judgments that underpin management's assessment of the entity's ability to continue as a going concern. To strengthen the work in this area, we have drawn on some key requirements and application material in ISA 540, the Audit of Estimates. Our proposals in this regard include a more robust evaluation of management's assessment, including a more rigorous understanding of the method, data, and assumptions used by management in making their assessment. The requirements also improve linkages to other audit work, as the auditor is required to evaluate whether the assumptions are consistent with those used in other areas of the entity's business activities. We have also proposed more robust requirements that address those situations where the auditor identifies events or conditions that may cast significant doubt that management has not previously identified or disclosed to the auditor. Respondents to the discussion paper emphasised that the auditor's evaluation of management's assessment should draw on a wider range of available information to support their work. The enhancements we have made to the risk procedures and evaluation of management's assessment in this regard will be a strong step forward. In addition, we have also made enhancements to several paragraphs in the application material to emphasise how information from sources external to the entity can be leveraged in the auditor's work related to going concern. For example, when evaluating management's plans for future actions. Importantly, when management's plans for future actions include financial support by third parties or related parties, and that would include the entity's owner-manager, the standard proposes that the auditor is required to evaluate the intent and ability of those parties to maintain or provide the necessary financial support. Application material has been included in the standard to guide the auditor in considering what procedures they could undertake in obtaining evidence about intent and ability in respect of financial support from third parties. Now, the IAASB recognised the critical and central role that professional scepticism plays in delivering a high-quality audit, and we have incorporated the concept of professional scepticism in several parts of the proposed standard. The proposal that I outlined earlier in relation to developing more robust risk procedures and a more rigorous evaluation of management's assessment support the application of professional scepticism. And we have also introduced some specific requirements and application material that highlight the importance of scepticism, including requirements to address the potential for management bias. I will now hand over to Ado, who will walk through the other key proposals in the standard.
Thank you very much, Josephine. So now let's turn to the key changes we're proposing to the communication with those charged with governance. The requirements have been strengthened, new application material has been added, and it's all based on how ISA 260 operates. In particular, the communication is strengthened when events or conditions that may cause significant doubt on the entity's ability to continue as a going concern have been identified. If this is the case, the auditor should communicate with those charged with governance about the adequacy of disclosures that describe the significant judgments made by management, but also the mitigating factors that are part of management plans. The auditor is also required to communicate the basis for the auditor's conclusion and provide an overview of the audit procedures that the auditor performed. In certain cases where management may be unwilling to make or extend the assessment for the entity's ability to continue as a going concern, if that is the case, the auditor is required to communicate that to those charged with governance as well. Furthermore, the timely two-way communication. This is enhanced by requiring the auditor to obtain an understanding how those charged with governance oversee management's assessment of the entity's ability to continue as a going concern. The auditor is also required to understand what those charged with governance consider to be events or conditions that may cause significant doubt. Well, those two-way communication aspects, we believe, will support the auditor's identification of areas of potential focus in respect of management's assessment of the going concern much earlier in the audit, i.e. at the planning stage of the audit. In response to increased expectations from stakeholders regarding the public interest role of auditors, and also reflecting developments in other jurisdictions, this exposure drafts includes a requirement for the auditor to determine whether law, regulations, or relevant ethical requirements exist that require or establish responsibilities that permit the auditor to report to an appropriate authority outside the entity. This applies specifically to situations when a material uncertainty has been identified or is included in the auditor's report, or a modified opinion is issued in respect of going concern. This builds upon or is consistent with a requirement in current ISA 250 to report to an appropriate external authority when identified or suspected non-compliance with laws or regulations are identified. Let's turn to the transparency about going concern in the auditor's report. At the time of the 2016 reporting revisions, the IAASB did consider but dismissed including explicit conclusions in the auditor's report about going concern. However, stakeholders have continued to ask for more transparency by the auditor about going concern. In addition to that, stakeholders also noted confusion about the relationship between key audit matters and material uncertainty related to going concern, an emphasis of matter paragraph, and maybe a lack of information about so-called closed call situations. So those are situations when events and conditions exist that may cause significant doubt, but the auditor concluded that there's no material uncertainty. Consequently, a major focus for us was therefore to explore what additional disclosures could be made in the auditor's report without getting boilerplate, without adding excessive length to the auditor's report or increasing the complexity thereof. So after our deliberations, the exposure draft is proposing several new reporting requirements. Some of them apply to all entities, some of them only apply to listed entities. In respect of the reporting and the transparency for all entities, there will be now a specific section in the auditor's report that's either going to be called going concern or material uncertainty related to going concern. Of course, when there is a material uncertainty. In that section, there will be explicit statements about the appropriateness of management's use of the going concern basis of accounting and whether a material uncertainty has been identified. So that will be explicit in all auditors' reports. For listed entities, it goes a little bit further. For listed entities, when events or conditions have been identified that may cause significant doubt on the entity's ability to continue as a going concern, then the auditor is required to explain how the auditor has evaluated management assessment of the entity's ability to continue as a going concern, both in the circumstance that the auditor concluded that there is a material uncertainty, but also in the case that the auditor concludes that there is no material uncertainty. So this is, for example, in the closed call situation that I referred to before. maybe not as key, but still important further changes that have been proposed is that we are including examples of the use of automated tools and techniques, and we are providing emphasis on the impact of technology on the auditor's work. In respect of scalability, I guess it's worthwhile to mention that the revised standard applies irrespective of the entity size or complexity. However, certain reporting provisions apply only to audits of financial statements of listed entities, as we just discussed. And we are providing examples in the application material that seek to demonstrate how the auditor's procedures may vary based on the nature and circumstances of that entity, and depending on the method, assumptions, and data used by management to assess the specific entity's ability to continue as a going concern. The exposure draft also required certain conforming and consequential amendments to align with the other ISAs. And in light of the proposed reporting on going concern in the auditor's report, where now a separate section is to be included, there were consequential amendments to the 700 series. Notable as well is the updates to the illustrative auditor's reports that now include, or that separate section, including the explicit statements. So those are the key changes that the exposure draft of 570 revised is bringing to the table. So what are the next steps? The Going Concern Task Force, as well as the IAASB, will perform outreach, and that is IAASB speak for ongoing dialogue and engagements with others in the financial reporting ecosystem to get as much feedback on our exposure draft as possible. Clearly, the comment letters of which we hope to receive many will be considered, will be deliberated, and all the issues and proposals will be part of our discussion, ultimately aiming for a final approval of 570 revised at the December 2024 IAASB meeting. Concurrently, we will coordinate with the other IAASB task forces and consultation groups. Maybe not as specific to the revision of the standard, but not less important in respect of the broader ecosystem issue or public interest issue that going concern is that we will also continue to coordinate with the IAASB liaison group and engage with the IAASB to see if they can step up the requirements in respect of the financial reporting part of the ecosystem. So now that we have provided you with a brief overview of the reason behind this project, the public interest issues we're trying to address, as well as the key changes in comparison with the current standard, we would love to hear what you think of this. Please share your views and submit a comment letter. This is vitally important to make the standard better, more robust, more practical, more scalable, but also more in the public interest. You have until the 24th of August 2023 to submit your comment letter. And if you need any further information, please visit our website at the indicated address or link. Here you can also find the slides that were shown during the presentation. And this is also where the other videos, one on the timeline over which the going concern assessment is made, and the other one in respect of transparency about going concern in the auditor's report, will be posted. We very much look forward to hearing from you. Many thanks for your attention.